Hello everyone, welcome to Financials with Satya. In this video, we are going to learn about retained earnings, the meaning, definition, and the formula to calculate retained earnings. Retained earnings are the portion of a company's net profit that is kept aside for reinvestment instead of being distributed to shareholders in the form of dividends. Retained earnings is equal to beginning retained earnings plus net profit minus dividends. This is the formula we can use to calculate the retained earnings. The beginning retained earnings means which is already in the company's previously earned retained earnings. The net profit will be added to the previous retained earnings after distributing some amount in the form of dividends to shareholders. Let us understand it deeply. Retained earnings are the profits a company keeps after paying dividends to shareholders. Retained earnings are the profits of a company which is kept aside for the future requirements. Instead of distributing all profits, companies retain some money with them. Let us understand the reasons for keeping this money or profit with the company. Grow the business, invest in new project, pay debts, save for future needs. Grow the business. Businesses always wants to grow in all perspectives, whether it is expansion or diversification. It needs funds in the form of capital. For this capital or funds, they save these profits. And second one is investment in new projects. If any company wants to invest in a new project, it needs money. These funds are used for business expansion, research and development, or covering operating cost. So these funds will be used for investing in profitable new projects, pay debts. The company's debts are to be clear whenever it is required. For this repayment of their debts, it require lot of amounts. Save for future needs. As business is always in a uncertain environment, we can't predict what will happen in the future times. To meet all these uncertainties, the business require some portion of their profits in the form of retained earnings. Let us see the formula again here. Retained earnings is equal to net profit minus dividends. If the company is having previous retained earnings, we can add here previous or beginning retained earnings plus net profit minus dividends. Let us understand this concept with a simple example. Net profit is equal to 1 lakh, dividends paid 30,000 and retained earnings. The formula is equal to 1 lakh minus 30,000, the net profit minus dividends. Here comes the 70,000 will be treated as retained earnings. I hope the formula and the concept is clear now. Let us understand where these retained earnings will be shown in our financial statements. It is shown under shareholders' equity in the balance sheet. The liabilities and the equity portion, which is on the left side of the balance sheet, we can see these retained earnings. Higher retained earnings is equal to more reinvestment capacity because the company is having more funds with the business. It obviously can invest in any of the profitable projects. Here, the higher retained earnings is equal to the ability or capacity of the company to invest in new projects will be more. are high. So easy way to remember is profit earned is is paid in the form of dividend to shareholders, and the remaining portion will be treated as retained earnings. So I hope this concept is clear all of you to all you. Thank you.